Welcome to my stock picking strategy comparison, September 18th, 2018. I'm sharing my stock journey as I compare some stock picking strategies. This isn't an endorsement to purchase any stocks that I've bought, nor is it an endorsement to purchase stocks in general. My focus is on picking stocks. Is it the right stock at the right time? I was reviewing some of my previous holdings and I ran across this chart for gravity, which I thought illustrated the point of right stock at the right time pretty well. So this isn't a stock that I would want in my portfolio today. It has a relative strength of 8, and I like mine to be at least above 90. But if you held this from September 2017 until December 2017, you were a happy camper and could have made over 500% gain in that short time. I held this for part of that time and had a gain of over 200, which I was thrilled with. I get my ideas from Investors Business Daily. You can find them at investors.com. They have an online presence, and also they have a newspaper that you can get digital or in paper format. That newspaper has lots of lists in it that show a bunch of charts that for years I've been enjoying and picking my stock from. Some of them include the IBD 50, the Big Cap 20, Stock Spotlight, IPO Leaders, IBD Sector Leaders, Income Investor, and there's lots of articles also. So you can get tons of ideas from that. And if you're new to investing, I suggest you read that paper and check out their website to get some more understanding of investing. For the last year, I've subscribed to their premium product, MarketSmith. There's literally hundreds of lists that you can review stock charts from each of those lists, plus screens, and there's the ability to create screens of your own. Investors Business Daily also reports on the market direction. The market right now is in confirmed uptrend, which for me means I can buy. When it moves to uptrend under pressure, you should be very selective about your buying. Not that you shouldn't be generally, but extra cautious on your purchases, and you may want to consider anything that isn't performing as well as you'd like to cut those. When market's in correction, you should be really considering, for the most part, getting out of the market. I use these tools to help me identify stocks quickly and easily. And what I'm doing with this experiment is I'm trying to determine which picks or which lists perform the best for me. So the 3 lists that I looked at this week are the stocks that have IPO'd within the last year, tight areas where stocks have closed consistently around the same price for several weeks, and then what I call my Tandem-like screen. Tandem has been a great performer for me, so I looked for characteristics similar to Tandem at the time I purchased it to develop this screen and then buy stocks that look like Tandem. The first group I looked at is stocks that have IPO'd in the last year. The first one I bought was Evo Payments. I purchased it on 9/17 for $26.80. Bandwidth. I haven't bought that yet, but I am putting in an order to buy that for $53.75. Massimo. I am also going to put in an order to buy it for $121.75. And Stitch Fix. I just think it's going up too fast, too quickly. I'm a little scared to get in, so I'm still watching this one, but I have not purchased it or put in an order to buy. Same with I3 verticals. The ones that have the tight area, the first one is Adobe Systems, and it's hard to see because it has the blue area showing a pivot point, but before that last tick mark, the previous 3 tick marks are all closing right around the same price. And this is a week chart, so that's for the last 3 weeks. It's closed approximately around the same price. The other stock that had this characteristic where I liked its chart is Target Corp. And you can see highlighted in green where those tick marks are. Those three closed for the last 3 weeks around the same price. I did not buy either of these tight area stocks, but I may in the future. For my third grouping, I created a screen in MarketSmith that I call my Tandem-like screen. And I'll show a chart of Tandem in a minute, but basically this screen is looking at stocks that have a composite rating greater than or equal to 85, a relative strength greater than or equal to 98, a current price of lower than or equal to $15, and an accumulation distribution rating of an A. And in MarketSmith, looking at all 7,633 stocks in their database, there's 8 stocks that meet that criteria. Here's what Tandem looked like on May 2nd, 2018 when I purchased it. Up on the top right-hand side, you can see the price is $8.14. On the bottom right-hand side, the relative strength is at a 99. You can also see at the bottom that it had some great volume there, but I did not put that into my screen. Maybe I should consider that. But the blue bars are showing that it closed up every day for several weeks in a row, and that volume is also increasing. Over on the left-hand side, you can see the accumulation distribution rating of an A+, which means there's lots of buying activity and not lots of selling activity, and the composite rating of a 91, which is an IBD proprietary rating. The first stock that I bought that matched this, got caught in the screen, was Champions Oncology. So I think this has Tandem-like characteristics, and I bought it on 9/17 for $11.65. Resolute Forest Products was another one that I thought was a Tandem-like characteristic stock, and I bought that one on 9/18 for $14.85. The third stock that I bought was LifeVantage Corp. I bought that one on 9/17, 2018 at $12.60. In the previous sessions, I had 2 groups of picks that I had already done, and we'll look at those also. They're the ready to pop, which are from the IBD 50, where the 10-day moving average have recently crossed above the 25-day moving average. It had a high relative strength, a high composite rating, and an A or B accumulation distribution rating. And the other pick group was with new RS high. They reached a new high recently, and those are both from MarketSmith. Since I only have a couple weeks worth of data, I am showing the gains and the losses on these charts. Once I have some more comparisons, I'll do the bar charts that have the $10,000 up and down, so you'll be able to see that. But I want to use Netflix as an example here. So on the left-hand side, I have Netflix example where I have a breakdown of my gain and loss. The middle section, the all gains, those are the dollar amounts that I was left with at the end of the week. So if you look in the column for 9/14, you can see the biggest winner in the ready to pop is a line with $150, and WWE had a gain of $17. That's what gain I was left with at the end of week that ended 9/14. On the relative strength new high, you can see Copart was down $192, while INGN was up $682. On the far right-hand side is the weekly percentage change. So the first week that I'm showing a number for is how much that stock gained in the week since I purchased it. So Copart is down $192 and it's down 1.9%. So that makes sense. If I look at Netflix, the first week it was down 4% and the next week it was up 4.6%, but I still only have a gain of $38. And if we look at the example, when I purchased it on 9/4, the amount I purchased was 9,805.05. Then I had a 3.98% loss, almost a 4% loss, which is approximately $391. And then that left me a balance of 9,414. I had a gain on that amount of approximately 4.6%. And again, remember these are rounded. In this case, it's showing that calculation is $433. And that leaves me a balance of 9,847 with a total gain of 42. And I realize the all gains is showing a total gain of 38. So just know that there's rounding in effect here, but I am not going to quibble about the $4 difference. So I'm going to leave my charts the way they are, and I hope that you understand that there is rounding involved here. Thanks for watching. Check in next week to see how these stock picks are performing. Or better yet, subscribe to my channel. Don't forget to hit the bell so you get alerts when I post my next episode.